Awesome. Hey, Nikki. All right, everybody.
Hello.
Thanks. Yeah, honest. Welcome, everyone. This is the Native CDFI Network's weekly Friday check-in. Thank you for joining us. And it looks like we're getting a little feedback. I'm going to mute some folks. So thanks for joining us, everyone. We're excited. I'm excited about this week. This week we have, we're going to hear from three great folks, and so I'm really excited. Our featured trainer today is Jack Northrup, and we'll talk a bit about him, but I think a lot of folks know him. Our featured member is Nikki Love from NCN Collective, and I think many folks in the Native CDFI network know her well, have worked with her. And we're also, we have the great pleasure to be joined by the Office of Comptroller of Currencies, Barry Whitus. So without taking more time, I'd like to, actually, before we get going too far, I want to see if our board chairman wants to say anything. Pete Upton, are you there?
Yeah, thank you, and thank you for everybody for joining. Again, Jackson, you got a good lineup here. So I just want to welcome everybody and hope everybody's staying healthy and being wise about what's going on in the world. So I just want to hear from all of our guests because we've got three powerful guest speakers. So we'll just get it rolling. Thank you.
Thanks, Chairman. So here's an overview of what we want to do. As usual, we start with a bit of the news, and that can help help our conversations. I'm going to keep the news very brief and very high level this week, so we can get forward. Then we'll speak with our guest, Barry, first. So I think Barry might have to go after a bit. So we'll do Barry, and then we want to go over a new initiative that we're working on. And Jack Northrup will talk a bit about that. And then we'll hear from Nikki about what NCN's been up to and a whole lot more. So we'll get going. So first with the news. This is, it's been a great week for Indian country, and one of the biggest pieces of news was yesterday, the Supreme Court reaffirmed tribal sovereignty in Oklahoma in a case called McGirt versus Oklahoma. I think most folks by now have seen some of the headlines about it, but really just want to acknowledge it and really acknowledge and say, this is great news for our friends and family in Oklahoma, and we're joined by several members from Oklahoma. But Christopher Coburn represents the Muskogee Fund, and he's on our board. And I paused really quickly to see if Christopher had any thoughts about this court that directly impacts both his tribal nation and we think hopefully will impact things like the Community Reinvestment Act, which we'll touch on a bit later.
Hi, I'm glad I jumped back in. I was taking another client call just then. So you were mentioning about the ruling in favor of Muskogee Creek Nation. Yeah, we're excited. Excited about Oklahoma's history is pretty troubled. The Allotment Act tried to dissolve the tribes, and this is just another strength of showing sovereignty and that the treaties are still in effect. I anticipate this will probably be more lawsuits to come by many tribes to try to extend their voice as well. But it looks like, from what I understand, this is a win for tribal for criminal prosecution. And if that extends to other areas, that would be great. But just as a Creek citizen, not speaking on behalf of my nation, I'm pretty excited about the possibilities, and I can see possibilities for us as a CDFI and other Native CDFIs in the Southern Plains region in Oklahoma to benefit from it. So we're hopeful, but I think now that the decision's been made, we'll have to see how that changes things on the ground, and I'll look forward to hearing comments from our chief and counsel and our Attorney General's office on what that reality looks like.
Thank you, Christopher. And I do think this could have impacts on the way Indian country is determined and the definition that we push forward, that the Office of Comptroller of Currency graciously listened to us. So I think it's still relevant. Moving on, this is news from last week, but it's still good news, and I wanted to share it. There's been progress made on dropping our name from the mascot, and one day I look forward to going to one of these games out here. So here's the news that I think is very relevant to our organization. I think a few weeks ago we highlighted that the House Financial Services Committee was going to be meeting and moving forward with legislation, and they did so the day before yesterday, and they approved a bill that has $273 million for the CDFI fund. And so where that stands, put that in perspective, is that's $11 million more than last year at the active level. And the majority of that 11 million goes to things they're calling small dollar loans. And it's the small dollar loans seem like they will be something that native CDFIs should be able to apply for. But it remains to be seen whether that provision will stay in there when it goes to the Senate. I think probably most notably and really most disappointingly, the Native American CDFI assistance funding is again stagnant at 16 million, and that's where we've been since 2014. So we're going to keep up our advocacy, and we're going to work with everybody we can and shout on top of the rooftops that Native CDFIs are doing great work, and we're helping bring up economies and helping bring up businesses. And at the same time, Congress needs to invest more in it. So, but a similar bill hasn't been introduced in the Senate, and so that's going to be the next step. And it still has to pass the larger House.
Hey, Jackson, on that, there, year after year after year after year after year, it stays stagnant. And what strategy can we deploy that makes our voices louder? Because apparently what we've been doing, isn't working. So we need to probably visit with, some of the lawmakers and just asking the question why. And maybe the question why not. It's just frustrating that year after year it stays at the 16 million. So yeah, that might be something we need to take a look at.
I share your frustration. We need to talk with the House Financial Appropriations Appropriations Subcommittee, and I think we also should talk. And I'm sure we have some of our allies on here that are not native CDFIs, but that do advocate for CDFI funding, and work with them as well. I think of note, there are a couple different proposals out there that are asking for either both $1 and $2 billion additional dollars for the CDFI fund. One's pushed by a lady named Alma Adams of North Carolina, and that's in the House. And there's a similar provision or a similar bill that should be coming out. It's not public yet, but it'll come out pretty soon on the Senate. Pause. So there are folks at Congress who are listening and want to fund not just at 273 million, but talking billions of dollars. But at the same time, the bottom line is $16 million is not something we're happy with, and we're going to keep moving forward. We got a couple questions about NAHASDA being reauthorized and reintroduced. So I wanted to lightly touch on this, and if anybody wants to follow up with me afterward, I'd be happy to, but just wanted to flag it. The Native American Housing and Self-Determination Act is a bill that largely authorizes two big programs. One is the Indian Housing Block Grant that is administered by the tribally designated housing entities, TDHEs, and it also authorizes Title VI loan guarantee for financing for tribes to do private market loans. And so I think the notable thing about this is the bill's been really slow moving forward in the Senate for the past few years. Actually, NAHASDA expired in 2013, Congress appropriates funds for it, but the NAHASDA statute was really is out of date. So it's good to see that there's bipartisan support for this in the Senate, and that's really where it has been slow to move in the Senate. So that's good news. I want to flag that for everybody, but we have a lot to cover today, so I'm going to continue moving forward. One more thing, I want to flag that PPPs has been extended through August 8th, and this is news from last week, but wanted to make sure folks are aware of it. And if you have clients that still want to access the PPP, we encourage you to reach out. And we have a few folks that we've worked with. There are also 2 native CDFI banks that are doing loans out there, Native American Bank and then Bay Bank. Okay, and now we'll get to the fun stuff. Hear from our guests, and our first guest is Barry Whitus. And Barry is the Deputy Comptroller for Community Affairs at the Office of Comptroller of Currency. And he leads the Department for Community Development Professionals. He's based in Washington, D.C. And the Community Affairs staff is responsible for outreach to banks and community partners. And I think I want to acknowledge him. He's done a great job of reaching out to folks in Indian country like the Native CDFI Network and the Native American Finance Officers Association, in particular respect with looking at the Community Reinvestment Act and how to ensure that Native CDFIs, or just Indian country in general, participates in the review and the update of that Community Reinvestment Act. So thanks for being on, Barry. And Barry, can you maybe start off with just giving folks an update, a reminder about who the OCC is and where they play, and then also about the Community Reinvestment Act and what it is.
Absolutely. Well, good afternoon, everyone. And again, thanks for the invitation to be with you this afternoon. I want to thank Jackson and Native CDFI Coalition. They were great partners working with us as we've, over the last few years, been evaluating the Community Reinvestment Act and which communities are not receiving their fair share of funds. And that certainly pointed out to us, how deficient bank lending and investing in retail activities have been in Indian country over the years. So I want to thank Jackson and the Native CDFI Coalition for helping to educate us about this. So just stepping back a moment, the Office of Comptroller of the Currency is a bureau within the U.S. Treasury Department. We supervise national banks and federal savings associations. They represent about 70% of the nation's banking assets, including most of the major banks that you probably are familiar with. We administer the Community Reinvestment Act. We examine banks for the Community Reinvestment Act and issue a rating every 3 or 4 years based on how well the bank has done in terms of serving its communities where it has branches and deposit-taking facilities. A bank that doesn't do well on its performance for CRA, it needs to improve, or substantial non-compliance, has restrictions put on their expansion activities, including new branches or merger activities. So it is important to banks to do well on their CRA performance. And every 3 years, we issue a public report indicating whether the bank had an outstanding rating or a satisfactory rating, which are ones that would not impact the bank's ability to engage in expansionary activities or new branches. And then those that get the next lowest rating needs to improve, or the very bottom rating, substantial non-compliance, have those restrictions. So you can go to our website, occ.gov, and look up the CRA performance evaluation for any national bank or federal thrift, and and see how well they're doing or have been doing in terms of serving your communities. But getting to the original point, certainly over the past few years, in terms of our conversations with the Native CDFI Network and other organizations, it's been very clear to us that the construct for CRA over the last 25 years, as the current reg has been in effect, has not served Indian country well, because it's dependent on where a bank has its branches or deposit-taking facilities, and the fact that so few banks do have branches and deposit-taking facilities in Indian country, that those areas then do not become an area that we evaluate, also called an assessment area. And that really has, as the data that Jackson and your organization showed us, has really had a very detrimental impact on access to capital in Indian country. And so it was as a result of a number of meetings, reports that you all shared with us, comment letters, and then a 2-day visit that the former Comptroller Otting and myself and many of the senior leaders within the OCC spent with banks and tribal organizations, touring the pueblos, several pueblos in New Mexico, and really seeing just how deficient bank lending and investment was and has been in Indian country. That really spurred us to make sure that we, in this new rule that we put out and finalized for CRA just back in late May, will how it can more effectively serve Indian country in the future. So that's what I wanted to focus my remarks on today, is to walk through how Indian country will benefit from this new rule. So let me first start by saying that the rule is only going to affect national banks and federal savings associations. Unfortunately, after much effort to try to make this an interagency effort with the Fed and the FDIC, we weren't able to reach a common ground of understanding and agreement. But nonetheless, national banks and federal savings associations represent about 70% of the nation's banking assets, including most of the major banks that you're familiar with. So what does the rule do, and how does it benefit Indian country? The most important thing it does is it provides much greater clarification of what activities count for CRA credit. And we really went quite far in terms of identifying credit needs, both retail credit needs in Indian country as well as community development needs in Indian country, as being automatically qualifying for CRA credit. That's a significant improvement over the past, where it had to be an LMI area in Indian country, and maybe that covered a portion of Indian country, but it didn't necessarily cover all of Indian country. And it certainly, as it relates to some new activities like essential infrastructure, essential community facilities, those have been called out as being automatically eligible for CRA considerations if it's an Indian country. So when the banks are evaluated based on their performance, we won't just evaluate a bank where it has its branches anymore, but we will also say that for those banks that are virtual banks that don't have branches, or banks that have a very significant portion of their deposits coming through the internet, that they will be evaluated in those areas where they have significant deposits coming in. And we also established that a bank not only will be evaluated in the areas, the assessment areas where it does have branches, and these additional areas where these banks that take a lot of deposits through the internet receive those deposits, but we're also evaluating the bank at its overall level, at the entire bank level, and we'll be establishing certain thresholds of performance based on what percentage of their deposits are invested in CRA activities and what percentage of their assets are invested in specifically community development activities. So those are positive moves, I think, as well. We also in the past said, well, a bank couldn't really get CRA credit outside of the areas where it had branches. And that really hurt the Indian country access to capital as well, because that just basically ruled out CRA consideration, even those areas that are, in those areas where they don't have the branches. So we have now broadened that to say, a bank, even if it doesn't have branches in Indian country, it can get CRA credit for doing those activities in Indian country. And that would be evaluated, at what we call the top of the house, when we're looking at the bank's total assets and seeing how much of their total assets are dedicated to CRA activities or other community development activities. And the other thing that I would point out is that we provide certain multipliers or additional incentives for banks that increase their CRA community development activities relative to their last performance evaluation. And we will provide these multipliers in cases where we think it provides particular benefit to Indian country. So, for example, CDFIs will get a multiplier. If a bank invests $1 million in a CDFI, it'll get $2 million of credit, assuming that it's doing at least as much community development activity as during its last exam. Another area we'll provide a multiplier is if the bank engages in activities in credit deserts. And credit deserts really almost were written with Indian country in mind. It says where there's a significant unmet community development or retail lending needs.
I said, then you can start helping again. A lot more work.
I'm going to mute folks.
Okay.
Yeah, there you go.
Okay, thanks. So anyway, I was saying Indian country is certainly an area where there's significant unmet community development or retail needs, or there is a lack of branches or deposit-taking facilities, or less retail or community development lending or investing than would otherwise be expected based on demographics or other factors. So Indian country most likely would get an additional 2 times multiplier, if it's in a CRA desert. And then finally, we say that community development investments and community development loans would also be a multiplier of 2. So if a bank made an investment in a wastewater treatment facility in Indian country or made a loan for it, you take the amount of that loan or investment and multiply that by 2. And then finally, we have a multiplier for activities that are particularly innovative, responsive, or complex. And so many deals in Indian country may meet that criteria as well. So we're creating these additional incentives for banks to go to places where they haven't gone in the past. And we're providing a mechanism that can be quantified in the bank's overall performance, so that the bank knows, if I do this in Indian country, it's going to help my performance by this amount plus the amount that I'm going to get a multiplier for. And that's assuming I'm doing at least as much as I did the last exam cycle. So these are all, I think, have very considerable benefits in the rule, and really ones that we incorporated in large measure because of what we have learned, just how much CRA did not work to benefit Indian country, over the last 25 or more years. So I know that you all are short on time, so I'm going to just make a couple other points in conclusion, and then see if we have time for questions. Number one, these provisions that I've described, for the most part, apply to what we call the general performance standards banks. And these are banks with assets over $2.5 billion. These banks represent about represent the lion's share of assets within the national banking system. The vast majority of deposits within the national banking system, are in institutions with greater than $2.5 billion in assets. I think I mentioned previously, 70% of the nation's banking assets are in national banks or federal thrifts. So even though it won't apply to every bank, it will apply to certainly the major banks that many of you are dealing with in your communities or would like to be dealing with. Now, we did leave the rules pretty much intact for your smaller banks. Your smaller banks are what are called intermediate small banks. They're between now institutions with assets of between $600 million and $2.5 billion. However, we have opened up the new community development criteria, which includes, essential infrastructure and essential community facilities in Indian country. Those banks that have a community development test, these intermediate small banks, will be able to take advantage of these provisions come October 1st. And then finally, we have our small banks, banks that are under $600 million in assets. We've made very clear that these small banks, while they don't have a community development test or evaluation per se, to the extent that these institutions, smaller institutions, do want to do community development activities, we made it clear in terms of how they'll get CRA credit for doing those. So where do we stand? Over the next few years, these general performance standard banks will begin collecting data, defining their new assessment areas, and within the next few years, we will be fully implemented in terms of doing exams for these general performance standards banks under the new rule. So there is this rule was not without controversy. Particularly certain members of Congress were not satisfied with the rule, and in the House, in fact, a resolution, HJ Res 90, was passed a few weeks ago that sought to overturn the rule. That only has passed the House, has not been taken up in the Senate, and a veto threat has been issued by the President were the Senate to vote to override, but I have no indication at this point what the Senate plans to do. So that's something you probably should be aware of. But again, I want to just conclude by saying that we have materials on our website that Jackson has that I'm sure he could share with you all. We have a copy of the rule that was in the Federal Register on June 6th, and then we have a very lengthy list of qualifying CRA qualifying activities that identify many examples of the kinds of activities in Indian country the banks can get CRA credit for. We never had a list like that before. Hopefully, by calling out many kinds of ways banks can get CRA credit for lending, investing in Indian country, that will incent more capital as well. So I'm going to stop there, and again, thank you for the opportunity to present this, and I'll ask Jackson if we have time for any questions at this point.
Yeah, I think we have time for one question, and so it looks like we've received one. I think Nikki Love had a really good question about coordination with the FDIC, and I'm not sure if you're able to see on the Zoom chat there, Barry.
Hold on, let me put it up.
Never mind. I can read it.
I see it. I got it. So the FDIC and the OCC did put out a rule together in January, and FDIC Chair McWilliams indicated that because her agency largely supervises smaller and community banks, the FDIC supervised institutions maybe only represent about 15, 17, 20% of the nation's banking assets, and the fact that these institutions are already struggling with a number of issues pertaining to COVID and concern about reg burden. The FDIC chose to not adopt this rule at this time. So since the question was, is of the FDIC of the same mind? Obviously not.
Yeah.
And is the OCC coming up with a high-level report card that is the equivalent of an overall rating that's an average but doesn't show the discrete activities like Indian country community development? So how will we know if a bank is operating in your area, doing a good job? We are going to be evaluating banks and in every assessment area that they have, but then we'll also be evaluating banks in every state where they have a presence. And then we'll come up with an overall rating for the bank based on the percentage of their activities, as a percentage of the assets of that institution. We have not entirely nailed down how we're going to report this data back. So I think it's premature to reach a conclusion that the data will not be available. Frankly, the critics of this rule have been just frankly grasping at straws to find things to criticize and to make their case. But we haven't come up with the format or the contents of the report that would go out. But we certainly are sensitive to the point that has been raised here in this question. And as we get closer to that date, I think there'll be more time for dialogue about how those reports get structured. Is OCC planning a national bankers roundtable on the topic? Well, a number of banks that we supervise have asked us very specific questions that are really in the weeds in terms of data system conversion and when the old rule stops applying to them and when the new rule does start applying. So we are going to try to hold sessions where for the banks that we supervise, we can get into these very nitty-gritty questions. So hopefully that answers the questions.
Well, thank you, Barry, for taking the time to come join us. And also thank you for listening to the Native CDFI Network's comments on the CRA. So I appreciate your time. And I wish we had more time, but we gotta keep on moving.
No, I totally get that. If you have questions, Jackson, you have additional questions, forward them on and we can try and answer them. But again, thanks everyone for inviting me to participate today and listening to our CRA modernization, and look forward to continue the dialogue. Take care, everyone.
Thanks, Barry.
Bye-bye.
Okay, great. And hopefully our goal is that the CRA modernization results in increased investment in Indian country, hopefully. Now moving forward, excited to announce, really this is a pre-announcement for the announcement, but on Monday we're gonna announce that we are moving forward with something called Native CDFI Network Institute. And this institute is really designed to help support our members and take them to another level. We, prior to COVID, we were planning on doing some regional meetings and some regional trainings, but obviously that's not an option now. So what we're going to do is we're going to do some online trainings. And we wanted to announce our first, and that's why we brought Jack Northrup on. He's going to be our first trainer, and he's going to talk a bit about really this opportunity. And we want to start sign up next week, and we're going to keep it free, but also limited to a first few. And I guess before I get too far in that, I want to see if our Chairman Pete Upton want to say anything on the institutes.
I think this is a great tool, Jackson, to add capacity building to our Native CDFI executive directors at an executive level, and bringing Jack on to do the first in a series of Native CDFI institutes is really, I think it's going to really have a dramatic impact on the level of training that we provide executive leaders within the Native CDFI industry. So I'm excited about this, and then also excited about the future trainings that we have planned going through the end of 2020 and into 2021. So yeah, I'd like to hear more from Jack here.
Okay. Well, yeah, I'll introduce Jack. I've had a great pleasure to meet Jack recently, and he is obviously someone that I think a lot of Native CDFIs already know. We have his bio right here. and he is someone who comes with great significant experience in all different levels of nonprofit management. And one of the areas that he excels at and that we want to share with our members is financial management for native CDFIs, and something that he's done several trainings on already in the past. And I want to acknowledge the Great Plains and Rocky Mountain Coalition, who also acknowledges and brought this up as an idea. But before I get going, Jack, are you there? And can you play us a tune a little bit, and then talk a bit about our first module for the native?
Yeah. So you can hear me, I assume.
Yes.
Okay. Yeah. So with that build up, it's all going to be downhill from here. So we're going to do the training is going to be 2 parts, or the webinar. It's going to be how to create a dashboard. And so the dashboard, many of you might be experienced with it. But I'll relate a story. I did some work a bunch of years ago for Annie E. Casey Foundation. And, they do the kids count where they spend, I don't know, $30 million a year doing surveys all over the country. So you got a board of directors that, are the high and mighty for the Annie E. Casey Foundation. And they had like 12 volumes of data for each year that they've done this for 20 years. And so me and another consultant went in a room with them, with a couple of the board members and their president or their ED, whoever it was. And they said, listen, if you let this out of the room, we're going to kill you. But we don't really have a clue what any of this data says. We spend $30 million a year, and, we're all ashamed to say we don't know what the hell you guys are talking about, the college professors. So I work with them and try to figure out, well, what do you guys actually believe? What is it that's important to you? Forget about Annie E. Casey, forget about UPS and Bob Casey. What do you really want to know? And they said, well, we want to know if the more you save, the more you work, the more you save. The more you save, the better the credit score. So sort of impact. So we took about 12 impacts, and I went through all of the data that they had to see if anything illuminated it. And a couple of things did, but in the end, they were spending a lot of money, and some of it was for show. In the end, we got a dashboard together of what they wanted to see. So that's all the dashboard is. What is, let's take a lot of data, and what is it we want to see? So we got to figure out is the dashboard. So I did a dashboard for NCN, and I think Cindy Logston, the treasurer, she wants to see, how's our cash? In Pete's Native 360, his board may want to see how many loans did we do. So depending on who your audience is, we don't have to create an enormous dashboard, but some board members only want to see 2 things. Do we have enough cash, and how many loans did you do? That's the dashboard. Other board members may want to see, current assets over current liabilities. Funders may want to see impacts. So maybe you may need more than 1 dashboard, or a staff person may need more than, have a specific dashboard. Investors want to see certain things. So impacts might be, number of jobs created this month or quarter. Let's assume a quarterly basis. Number of jobs, number of permanent jobs, number of loans closed. Who do we help? Housing rehabilitation loans we made, foreclosures prevented, that stuff. So I guess the idea with the webinar, the first part would be to talk about this and go around the room and figure out what is it, the people you're serving need. What information do they need? Really in brief format. And then the second one would be to actually put it together. So between the first and the second webinar, this is why it's limited to 15. People would send me some information. I try to put up a mock dashboard that isn't going to be too complicated, but using Excel generally. So a lot of I'm more number oriented. So you may want to bring your audit and your most recent financial statements or quarterly statements to the first meeting, and we can talk a little bit about it and talk about how we roll it up into a dashboard. And then I'll try to do a couple of them, and we can then discuss them. Or we can make a couple up if no one wants to show some of their information. And I can show you a couple that I've done over the years. So there was one other thing I wanted to say. Now that was probably, oh yeah, so this ties into the capacity building. At your last annual summit, I think Robin went around the room and asked folks, well, what are your challenges? And I was reviewing them today, that list of challenges. And one of the challenges was to have this top level data shown, financial information at top level. So I took license and I interpret that to mean a dashboard would address that. It's pretty simple. Listen, but I think you have to have some facility with Excel. The other thing I'd say is that many boards, in looking at dashboards get converted into charts. So whenever I have a client, it's always interesting to find out their numerical literacy. So when I talk to like sales reps, or sales managers, they like to see raw data. Whereas if I talk to boards, often they like to see pie charts. So again, the dashboard can be turned into pie charts or graphs or charts that always look good, depending on if your audience is, a bunch of CPAs. They don't want to see pie charts. If you got 6 CPAs on your board, they want to see data. And so who is your audience? It's not what you want to show them, it's what do they want to see. So sometimes you have to ask them, tell me 2 things that I can tell you every month that really matter in terms of this organization. So I look forward for folks to sign up. I think Jackson will tell you how to sign up, and I'll see you in 2 weeks. And I'll answer any questions that people may have.
Awesome.
And hey, Jackson, this is Pete. One of the nice things about having a dashboard is being able to go back to the beginning of your organization or a period in time, maybe 5 years, and just being able to look, on an annual dashboard of, a 5-year path of maybe, cash, portfolio outstanding, loan loss reserve, current assets, and it really gives your board of directors or whoever is, you're working with, whether it be a foundation or you're going for a CRA credit, those are the types of things that they really want to see. And it goes into long-term debt, total liabilities, so that they can see where you've been and where you're going. And to me, it really helps your board of directors have a visual picture, and even doing an annual dashboard is very helpful, quarter by quarter, then at the end of the year converted into a annual dashboard. But yeah, I'm excited about it, and I think the knowledge that Jack has about this is going to be instrumental. So I encourage everybody to be one of the top, the first 15 to sign up, and he'll work with you one-on-one. So that'll be good.
Yeah, and I saw Dave Castillo's question about can you roll it up? So I did the NCN data initiative, I think in 2013 and 2014, and I think we tried to roll it up at that point. But I think, I think the roll up would be more, get all of your audits, and then we could create, a dashboard from that. Or certainly you can roll up dashboards based on many organizations. You do a regional dashboard. And I didn't want to get, and thanks Pete for going into the detail. I didn't want to get too bogged down into the ratios at this point, but some boards do want 15 to 20 metrics, and that's the dashboard. And it's not as simple as show me cash. It's right. It's current assets, it's debt, current portion due. It depends on what the board is and where you're at. And sometimes the consultant has to say, I know you guys don't want to hear this, but this is what you should really have in a dashboard. How many days do we run out of cash? That's important. So stuff like that. It's not a software. You can get software that do dashboards, but no, even QuickBooks or Quicken will do a dashboard of sort. No, this is like, tell me who the audience is, tell me what they need to know, what do you want to tell them, and then assuming most of it's financial, this is how we create that document. So it would be a low-tech Excel workbook, but the numbers could be, you could have a template where you put the information in and out pops the dashboard. So in one workbook, you might have your income statement. The next workbook, you might have your balance sheet. The third workbook, you would have the dashboard. And the fourth workbook, you would have the graphs and charts that accompany it. I don't want to make it a PhD thesis in terms of this. In 2 hours, you should be able to get a quick dashboard. If you're good with Excel, it's more up here than in the keys. What is it for me, the challenge is, what does the client want? What do they think they want? What do they need? And how do we bridge those two? So you may say the board wants that, but I may say the board wants something else. So it's not 50 things. It's you know, what will really help them and what is it they want.
Thanks. Well, yeah, we're excited about this. We think this will be a tailored, tangible, something that our native CDFIs can use and help the executives with their management, with their boards, and maybe other external parties like funders. So we're really excited about it. Thanks for working with us on this, Jack. And
Jackson.
Yeah,
Jackson, one more pitch on that too. It really does become a pitch to where you can create like a pitch notebook for whether you're dealing with a foundation, a funder, your board of directors, and that dashboard can be intermixed with all three on a quick pitch. You know, sometimes you have 30 minutes to make a pitch to a funder, and these numbers are very impactful to have right at your fingertips. So that's all I've got on that one. I'm excited, Jack, so looking forward to it.
Great.
Well, yeah, thanks. And yeah, thanks everybody for jumping on our call. So we wanted to make sure that the folks who jump on our Friday calls hear about this first, and we'll put it out there on Monday. So thanks. And now we're going to keep moving. Thanks, Jack. All right. And our featured member this week is Nikki Love, and Nikki's someone that I think most folks already know if you're in the native CDFI world, but here's her biography. She works with the Indian Collective's Indian Fund as their managing director. She's from Bois Forte Band of Chippewa. She's previously worked with the Minneapolis Federal Reserve's CICD, and obviously knows a bit about the Community Reinvestment Act. And one other thing that is not on here is she serves on the board for BG Win CDFI. Actually, they're now called Minnesota Fund CDFI in Minneapolis. And so quite a bit of background, and we invited her to come on. So Nikki, and then we asked Nikki to tell us, kind of give us an update on what Indian Fund's been doing. We've seen they've been very active in leaning in and providing grants of many different kinds, different businesses and artists. But learn a bit more about what they've been doing in response to COVID. And also it'd be interesting to hear from her, Nikki, on how Minnesota Fund and CDFIs in the Indian community in Minneapolis and in Twin Cities areas is doing. So Nikki, are you there? Maybe you're on mute, so I'll see what I can do.
Can you hear me now? One of those.
Yep.
Classic Zoom prompts. Can you hear me? So yeah, well, thank you for having me today. And if I don't always make our Friday calls, I am watching them afterwards. So just happy to clear some space today. And for those that maybe don't know, I'll just quickly say that Indian Fund is an emerging national native CDFI. We are part of the collective. So the Indian Collective has this ecosystem approach model that uniquely supports Indian Fund and in our kind of ambitious goal to sometime be able to deploy up to $100 million a year in projects in a few different lending areas, like renewable energy, infrastructure. Particularly, we hear broadband and water are of need across Indian country, social enterprise, community development, affordable housing, and then also holding some space for regenerative agriculture. And so, one thing that we talk about, our mission for the entire collective is to build the collective power of Indigenous peoples, communities, nations to exercise our inherent right to self-determination while fostering a world that is built on a foundation of justice and equity for all people and the planet. So it's like we're pretty new organization, but taking on a global, generational, and far-reaching mission. And so in the times of COVID, we've been working and building, Indian Fund to be able to scale, to do that type of lending, which is pretty large, to be also national, and then to really think about how do we do lending that is resilient and regenerative. I just had a call earlier today explaining kind of that thesis and how we intend to do that. And it would take a while to do it here. So I'm happy to talk about that at another time, but it's really building into the organizational principles. How are we making sure that we're achieving that big audacious goal of saying this was a just project, this will be a good project with good outcomes in the community, right? Even 100 years from now. And doing that involves a lot of heavy lifting and building and creating new spaces. So just wanted to say that, and then also thinking very intensely about how we provide capacity building. So like right now, Indian Collective and Indian Fund are creating all these different kind of access points for and resources for communities that we work with. So while the fund provides debt for a project, let's say, we're also working with other parts of Indian Collective to be able to source other forms of capital, like grants and also equity investments, and to also provide really deep tailored capacity building. So that could be for like pre-development or other specialized services, so that we have right capital stacks, right projects, or right consultants for these projects. And that can include capital outside of what I just described, like new markets tax credits, federal guarantee programs, impact investments, and I could keep going on. But I think the capacity building is really integral to this model actually working, so that we're leaving communities that they're able to pull in investments and do larger scale projects themselves, not necessarily needing to be in partnership with Indian Fund. And that's what I think, or what I hear is missing with a lot of the non-native groups that go in and do these larger projects. I've heard tribal leaders and CDFIs say, okay, they did this and then they left, and we don't really know, we're not carrying a lot of that knowledge, and we can't do it the next time. So to say COVID came along and like everyone else shook up like our plans for doing some of the bigger work, but we said we're going to lean in and we're going to do a both and. So we're going to keep building out the projects that we're looking to capitalize this year. Right now we have about 3 of them that are pretty much ready for our investment. But then with COVID, we said we need to think a little bit differently about where we can add value. So while the collective as a whole, some of you may have seen, responded quickly with a $10 million raise for grant making. We closed our first round recently. We were really looking at those organizations that were on the front lines, providing like emergency, medical supplies, food distribution. And then we're going to be opening up a second round. I think we're announcing it at the end of this month, and that it should be open early next month. But this round will also target and focus on Native CDFIs and how they play a role in restorative economies work, which is something that is part of our mission and theory of change. So we're going to be doing some grant making in partnership with OWISTA, targeting Native CDFIs and providing operating grants, and then also grants to help cushion like a cash reserve, because we know that so many of you have restructured your portfolios and may be taking a few hits. And then we also have launched a COVID Relief and Resilience Loan Fund. I will say that it is very early in its capitalization, so it's not yet, when I say launched, it's more launched for investment on our side. But that's aimed to look at both those smaller Native businesses, which is not typically where Indian Fund would operate, and then also looking at tribes that might need pre-development funding where it's gone stagnant, tribal enterprises that I think are typically kind of left out of this loop, or left out of the loop, and then they're like right critical to providing funding for services in our community. So if you're interested, I can talk a little bit more deeply at some other time, or you can shoot me an email about our COVID loan fund, maybe our second round of grant making at Indian Collective. And then if you're also interested in the projects that we're anticipating financing, like what's your model there? It's a project finance approach, but we're really looking at getting low interest investments on our end so we can keep costs low for the projects we work with. But I think I've said a bunch there. Want to look at the time. I think the other question is like, how are things in Minneapolis? Is that right, Jackson?
Yeah, yeah.
Oh, I'm going to also just really quickly, if you want to hear more, we're also pitching well, kind of that integrated capital approach. We are pitching alongside Valerie Redhorse-Moll, who was with SVC, Social Venture Circle, a session at SOCAP. I think today is the last day to vote, so I just dropped it in the chat. If you vote for it, then maybe we can, that's where we'll also go deeper into the model and what we're looking to do. But things are pretty, I put air quotes around like stable in Minneapolis now, but in the last few weeks, right, kicking dust off of an issue that shouldn't have been dusty. And I think what this time reminds me of is just how quickly our communities come together. And in Minneapolis, what you've seen with both like the residual AIM members, the community organizations like Minnesota Fund, and many others along that Franklin Ave corridor here coming together, pitching in with McGizzy. McGizzy was one of the, McGizzy Communications is one of the buildings that did go up in flames here. How quickly, like I think overnight we organized, right, the community organized a GoFundMe account to rebuild McGizzy. It's just showing quick kinship, and Minnesota Fund, like almost overnight, you know, when COVID hit, put a loan fund together, leaned in and provided like support with the Metro Urban Indian Council here, or Directors Board. I think the acronym is MUD, but they've also been really responsive, and then also working across community with our Black relatives. And I think that was a relationship right across the country that had broke down a bit since AIM times, since the 70s. And so Indian Collective is now, you know, holding a lot of space, but listening to like our relatives across the country on these issues, and still is forming more of a like unified kind of response partnership approach with other indigenous organizations, and our Black relatives too that are leading this movement. But we've seen with so many events going on right now that Black Lives Matter movement has catalyzed a lot of the issues that we're facing. So on the ground here in Minneapolis, things are seemingly back to normal. But when you think about, I don't have time to talk about it, Jackson, but all the policy responses and reform from the city of Minneapolis, the city of St. Paul, the mayoral office, from the governor's office, they actually put the Minneapolis PD on a restraining order. That's never been done. The police department's on a restraining order, and just thinking of all of these, the outgrowth of the things that Minnesota is doing in response, it's really groundbreaking. I think we'll see it in other areas. Indian Collective is leaning in to also be a good leader in this movement. And of course, there's so many other social justice issues happening this week. And I think we're seeing some wins. So I'll kind of leave it at that for time, but I could probably talk much, much longer on that.
Well, awesome. Well, thanks for sharing. I want to open it up to see if any of our members have questions for Nikki about what they're all doing. And
Nikki, I thank you for being on today's call. You bring a lot of knowledge and expertise to the industry, so I'm excited to hear from you and all the work that you've been doing. I'll reach out to you this week or this next week and visit with you by telephone.
Awesome, that sounds good, Pete. And I miss seeing you and many others on this call in person. So yeah, when it's safe to, we'll all cross paths again soon. But I'm happy to come back in future calls too, when we have more of like a launch of the next round for COVID and how it relates to the Native CDFIs, and supporting them, and also when we finally open up the loan apps for the loan fund that we have. So
cool. Well, yeah, I'm sure we're definitely going to be interested in the second round for sure. So and yeah, we'd like to, I guess, help get the word out. So all right. Well, we're right now at the end of the hour. Thank you everybody for joining. Thank you, Nikki. That's always good to talk with you, and thank you for what you're doing for Indian country. I think we have a couple announcements. So NCN's still hiring. And so reach out to me about that. Next week, we have Sequoia Fund and the Administration for Native Americans going to join us next week. Thank you to all our Native CDFI members, and appreciate what you all are doing there in Indian country to help grow and increase opportunity for our folks. Okay, thank you, Nikki. Thank you, Jack. And thank you, Barry. And Pete, you got any last words?
No, just be safe, and we'll see you next week. Thank you, everybody, for coming.
Okay.